Welcome to Crypto in America Live, the only show bringing you candid conversations on the biggest news stories, legal issues, and policy development shaping the crypto world. Every Friday at 12:30 Eastern. Happy Friday, guys.
Happy Friday.
Where in the world are we?
Happy Friday.
We are home. Are we all?
I don't think Mackie's home.
We're not home. All right. I am home. I'm home in DC.
Oh, okay. Well, this is my new home.
Are you still in Vermont, Jacqueline?
No. Ellie, you can't be outing my location like this. Next, we're going to be giving out coordinates.
It will remain undisclosed for her safety. Yeah,
Fine.
we go with that.
Yes.
I think.
Ellie, are you still in DC?
No. I'm back home in New Jersey now with what is not my apartment, but we don't have to get into specifics. But as you guys know, my parents have a much nicer background shot than my one-bedroom apartment with 4 cats. But we've talked about this before. Although I think on a day like today, where not saying the news is slow, it's not slow by any means, and we have some great guests to get to, but we could bring the cats on at one point in the show.
We'll have to. We'll have a pet segment at some point. I'll corral the pups, and then we'll do it.
That would be great. Well, speaking of guests, we do have another awesome lineup for you guys today. We have Jonathan Jachym. He is the global head of policy and government relations at Kraken. We're going to break down the big news of Kraken getting a master account this week. And then we also have Larry Florio. He is the deputy general counsel of Ethena Labs. We're going to talk to him about all the guidance and all the initiatives really coming out of the different regulatory agencies. We saw stuff drop from the SEC, the OCC, and the Fed. We've got some stuff coming from the CFTC regarding perps, which we'll get into later. So a lot of stuff to get into regarding regulatory guidance, and Larry will help us break all that down. But for now, let's get into the headlines of the week. I'm going to start with, I think, the news that everybody was talking about on Tuesday evening, which was President Trump weighing in on the stablecoin yield debate, taking the side of the crypto industry. Now, I don't know if you guys were expecting him to weigh in on this argument. I was talking to a couple of people at the Milken Institute conference on Tuesday, and a couple of those executives were saying, I don't think he's going to weigh in until he's done fundraising off of both sides. So I think they were maybe expecting him to weigh in a little bit further down the line, but to be fair, I was thinking about it. They really want the stablecoin yield deal to be wrapped up ASAP, right? So it would make sense if he was going to weigh in at all. He was probably going to weigh in roundabout now. But it is interesting that he took the side of crypto. Maybe not so surprising though, because he's not a big fan of the banks. He's not a big fan of JP Morgan. He just sued them for a lot of money. So I don't know. You guys not surprised? I'm not really surprised.
I'm not surprised either, but we really haven't heard him comment too much recently on crypto. So I think that in itself was surprising, but I guess if he's going to comment right now, it's not going to be about anything that his sons are involved in or right, so to speak, but maybe this matter. I think it's good, for us, and I think it'll probably get it across the finish line. But Gerald,
you think so?
I think so. I think it'll push it further. You guys don't? I'm being optimistic for once because I feel like I'm always negative when it comes to kind of like the government relations and the timelines for these things, but I think it'll actually help.
I think it's surprising. Like we've seen sort of a slow drumbeat from Patrick Witt on this point. And everybody knows, I think when the president gets involved in legislation, you expect action. And so hopefully we'll see some progress there. I will also just point out, it's not like he has anything else going on this week. So it is really good to see, like, I know the industry has been very concerned about all of the geopolitical stuff going on. Like there's other things that we've talked about on the show before that the Senate has to pick up, like the housing bill. And so there's I think fatigue is a good word for it, but with the banks coming into these White House meetings and being so entrenched, I think there was a question of whether or not the White House would either lose focus or just get stalled out, just up against midterms coming up. You mentioned the fundraising element. And so to see this kind of a post come from the president is obviously reassuring that the White House still wants to get this done. They're still trying to meet some of the deadlines that they put out. And so for me, that's the biggest thing that this indicates, is that the president is not abandoning the bill. It's still a legislative priority for the administration. And I hope that this does move the needle one way or the other.
Mm-hmm. Is there anything specific about this? Obviously it's a very Trump post. It's a couple sentences, a big paragraph, but was there like a specific line or something that you felt kind of had more meaning than the rest, or it was just the whole thing?
I mean, the 2 points that I pull out of this that I think the industry has been saying for a long time is he points out I mean, you could phrase it differently, right? Like good for the American people. The industry has been talking about consumer choice for a long time with stablecoins. And then also just this notion that you can't undermine the Genius Act. Like it is law and you were there, you were around the table. So to see it like that aligned, it's not like there's no mention of a compromise here. There's no mention that the industry is off base. It's really just kind of going straight at the banks on the 2 points that the industry has been trying to carry home for a while they've stalled the process on the clarity side.
Something that was interesting to me was the line, Americans should earn more money on their money. And someone who said that in multiple interviews on cable news is Brian Armstrong. And we do know now that Brian and the Coinbase delegation was at the White House on Tuesday afternoon. I reported that they were there. I could not confirm independently that they met with Trump directly, but Politico and I believe CoinDesk confirmed that later on. So we do know now that Brian Armstrong met privately with the president on that day. And I just think it's interesting that that is a literal quote from Brian Armstrong that he's used before that was in the president's tweet. So take from
And
that what you
it's a
will.
good quote. I think he likes good quotes. And so it's
Yeah.
simple, it's easy. Yeah. I
Yeah.
like it.
Yeah.
And it underscores just everything, right? Americans making money on their money. It is the whole stablecoin yield argument. But it is interesting that now that is not even part of the conversation anymore because we're not talking about yield. We're talking about rewards. People aren't going to be making money on idle balances. So it's just this notion of yield has become such it's a different thing, I think, than when they started these negotiations back in February. So it's interesting to see how it's all evolved, but more to come as it
As it always is.
unfolds, as there always is. Exactly.
April 3rd. April 3rd is going to be here very soon.
Yes. Yes. You mentioned the Senate's housing bill, Gerald, and something else that was notable earlier in the week is that the CBDC ban showed up again in the housing bill proposed by the Senate Banking Committee. And so that includes a provision to ban essentially a retail CBDC from a Fed issuing directly or indirectly one of these retail central bank digital currencies. But what was interesting in this was that the ban on it expires in 2030. And a lot of people on crypto Twitter were up in arms about this. They were like, wait, why would it expire in 2030? And curious to get your take on that, Gerald. What your reaction to that is?
Yeah, I think so. One thing you see, like we saw this with the original Trump tax cuts, and you see this with a lot of pieces of legislation that end up making it through, right? This is kind of a compromise where it's got sort of an expiry date. I think you also, I guess, want the flexibility, like not necessarily in a regime change situation, but maybe a technology or competitive situation where you want to leave the door open to be able to re-examine it later. So hopefully, I mean, I know the industry is very supportive of the language being introduced in this way. And the White House also, was pushing to get this language in there. So on the expiration piece, I think this is not common, but it is like fairly standard to have things kind of cycle out and then revisit the conversation, years down the road. We saw the Trump tax cuts basically get confirmed in the big beautiful bill. They didn't expire. Obviously, it may have been a different situation if the administration had changed hands. But it's a good initiative, and I think it also is very beneficial to kind of the rest of stablecoin issuers and the way that we want the system to work. So, very supportive of it.
Mm-hmm. And interesting that it's had several homes now. This ban on a CBDC. It's not exactly Emmer's bill that he introduced separately. It's sort of a more watered down version, is my understanding. But now we've seen it introduced as a standalone and then tried to be put into NDAA last year, which did not work. And now we've seen it show up again in this housing proposal in the Senate Banking Committee. But as we know, with text that's introduced in committee, who knows what it's going to look like when it goes to the floor and when it gets to the president's desk, right? So whether it stays in or not, we'll have to see.
Yeah. I will just also point on, like, housing is like a very bipartisan issue, right? Like everybody wants more resources to go into housing, and the supply in America has been pretty stagnant basically like since the financial crisis. So it was kind of a good tactic to potentially get this in there as a compromise, so that maybe we could get more bipartisan support on this initiative, but we'll see how it goes.
Yeah. Well, Uniswap won full dismissal of the scam token class action lawsuit, and I believe this goes back to the Risley case, Gerald. If I'm correct, this was a new class action born out of that case, which I believe Uniswap also won maybe 1 or 2 years ago, basically saying that they are not liable for what goes on from third parties on their platform. And Judge Fiala, who, as we know, was the judge in the Coinbase case, she was a judge in the Risley case as well. She ruled that this time as well, a platform cannot be held liable for third-party token issuers' misconduct. So I think a win for Uniswap, but potentially a win for the rest of the crypto ecosystem who has third-party users who engage in misconduct on the platform.
Yeah.
I mean, I was going to say, this is definitely like a reoccurring theme that we see in crypto litigation. And then also just like victims in general are looking for someone to blame.
Right.
And a lot of times they go to the platforms or where the crime actually happened, quote unquote, crime, if you could call it that in all these cases. Right.
Well,
But yeah, Gerald, go ahead.
no, I was just gonna say they go to the deepest pockets, right? Like that's like that's like what you do when you're trying to sue
Yeah.
somebody, is you just find the person with the most money and you try to make them liable for whatever the action was that you're considering. And so this, I was just gonna say, this also dovetails into, there's 3 ways to get clear rules, right? And we've talked about this on the show before. There's litigation, it's long and expensive, but it sets a precedent. There's regulatory guidance, and there's legislation. And so what this actually dovetails into is what I was on the Hill with a bunch of other people talking about last week, which is DeFi developer protection, right? And so this isn't like where if you have a securities exchange or a marketplace that has to do certain vetting of assets on, because they're permissioning the listing of those assets, they've gone through the diligence on those projects, and so you're not necessarily going to sue like a Robinhood for allowing kind of a junk stock to get listed on the platform, but there is a different diligence process that they have to go through with those listings. When you talk about Uniswap being like a permissionless platform, anybody can list anything, it's peer-to-peer. I think this dovetails really well into like developer protection, where it's like, look, it's not this software platform's fault that users traded this asset and they're not legally liable for that. So that to me is probably the biggest win out of this precedent.
Yeah. And I think it goes back to like the whole point you're talking about with the permissionless nature is like these DeFi protocols don't limit access to like quote unquote good guys or, certain listings the way.
Well,
like
no
Robinhood
terrorists,
and
right?
Coinbase
No
would.
terrorists.
No, sure. We draw the line there. Yeah.
Yeah.
Yeah. But it's interesting. I wonder if going forward then, Gerald, would people still sue on this, or it's like, no, there's precedent. It's not really going to hold up in court.
Yeah, I mean, so this is we have discussions, I guess, internally about this all the time, about how litigation works. Like, you can bring an action, right? Like, you can kind of sue anybody for anything in America, and you can go file the lawsuit and the paperwork and all that kind of stuff. But what this does is create like a very clear grounds for just motion to dismiss for these platforms, right? So like somebody can still sue you, but you can say, look, like we have this clear precedent, the facts and circumstances are the same. Courts have found platforms like this not liable, and then the judge can decide, if it's a different district or a different jurisdiction, like, do I want to take this up? Do I want to look at this? Or do I just want to like move on and rely on the precedent that was set? So it basically just gives people much weaker ground to stand on if they want to sue on this basis specifically.
Yeah, that's really interesting. And then yesterday, Justin Sun, speaking of litigation, right, Gerald, as one avenue, regulation by enforcement, one of those cases brought by the SEC was against Justin Sun, the founder of Tron. And the SEC originally paused the case, I believe, when it was kind of pausing and or throwing out the cases last year related to crypto, when they were kind of deciding, all right, which ones have merit and which ones don't. I think they paused it, but then yesterday they came out and said we've reached a settlement with Justin Sun, with Rainberry, which is that parent company of BitTorrent? There's a lot of different defendants named in this: Justin Sun, Rainberry, BitTorrent, Tron. So it gets a little confusing about like who is related to what, but basically Justin Sun has been cleared of, like all personal liability, and Rainberry has to pay a $10 million fine to the SEC and an injunction basically saying you can no longer commit, securities violations. But
Yeah.
there was some reaction to that yesterday.
Yeah, for context, Rainberry is formerly known as BitTorrent. It's a tech company that was owned by Justin Sun, and it still is engaged in the business, I believe, or it's like the developer behind it.
But, so they're all
it's a whole pool of them. Yeah.
Well, they're separate. But
yes, of course. Yes. Please don't come for me.
But yeah, no, I mean, it's interesting. Like, I think there's been a huge outcry on the traditional financial market side that like there's nobody at the helm at the SEC, and it's like crime season, and like crypto is getting away with whatever we want. And just to both of your points, like a settlement means that they did actually take, like they had enough essentially to make a case here. I know there's been a lot of speculation about trying to establish relationships with the White House and get like favorable treatment. I believe, is Justin Sun still the largest holder of the Trump coin? But anyways, so this, I think this does prove that like the SEC is still, watching for fraud and illicit activity, and they're just taking kind of a sensible approach to this. And so I also I like this also on the heels of SBF not getting a pardon, where it's like, look, guys, like, yeah, you can say that it's very pro innovation and things are moving fast, and the task force is kind of unprecedented in terms of industry alignment, but at the same time, like the regulators are still regulating. It's like the United States is still protecting market participants, and so I would expect like you probably would have seen a settlement. I can't speculate on the size of the settlement, but like you probably would have seen a settlement regardless of what administration was in charge here. And so that's positive just in terms of like still seeing the SEC as a financial regulator and a watchdog.
Yeah, that makes sense. I think another part of it too that I thought was, I don't want to relate it to FTX, but it's like that celebrity endorsement side that I know Reuters reported on for this case specifically. Like he was bringing on like Lindsay Lohan, Akon, Neo, Jake Paul, all these people to like promote BitTorrent and like Tornix on social media, accused of doing this. So it was not necessarily like disclosed, and it kind of goes back to the, like you should always kind of like verify those things on the back end.
Not unlike FTX with all the celebrity endorsements.
That's what made me think of it. But I think that was like fully like out in the public, like, hey, we are paid by SBF to do this. Whereas like these ones were kind of accusations that they weren't. So
yeah, Justin Sun, maybe the biggest holder of the Trump coin, but also he paid a lot of money for that banana. So that's what I always think of. I think of Justin Sun.
I'm gonna start it on the banana. Yeah.
Anyway, let's get into another huge story this week, and that is crypto exchange Kraken's banking arm, Kraken Financial, secured access to a Fed master account after applying more than 5 years ago. And it made it the first crypto firm ever to be able to tap the central bank's payment system. And here to talk about it now with us is Kraken's Global Head of Policy and Government Affairs, Jonathan Jachym. Jonathan, welcome back.
Thanks for having us today. Excited to be here.
Yeah. Well, congrats on the big news. I know this has been a long time coming for you guys, but before we get into sort of the specifics of what a master account allows Kraken to do, can you explain to us and our viewers why this is such a big moment for the crypto industry more broadly?
Yeah, absolutely. Exciting week for us. I think, exciting week and announcement for the broader digital asset ecosystem. But I think it's also, really exciting for American innovation and, the dual banking system cooperation between our state regulator, the Wyoming Division of Banking, the Kansas City Fed. So a lot to unpack here. I mean, I'll walk through a bit of the history. So it was a 5.5-year process. Our broader Payward family of businesses includes Kraken, as well as Kraken Financial, which is a state-chartered special purpose depository institution regulated and supervised by the Wyoming Division of Banking. We got that license back in 2020. We applied for a master account, and a lot has happened since then, right, in the ecosystem, but also with respect to how prudential and banking regulators are looking at innovative ways to sort of integrate the digital asset ecosystem and novel players into the traditional payments infrastructure. And our result is, one of the first examples of that. But it has been a very deliberate process over these years. I think if you sort of see what the Federal Reserve Board published back in 2022, with not just novel applicants for master accounts from the crypto ecosystem, but novel applicants with varying business models outside of the digital asset ecosystem. And the way the Fed handled that was with the framework. They created a three-tier framework and said, look, we're going to put these applicants in different buckets with different risk profiles, and we're going to approach each of these on a case-by-case basis, deliberately. And we were put in the tier 3 institution bucket. It is not an FDIC insured institution, but that is because the model and the approach that the Wyoming government has taken with this charter is that we are a fully backed, fully reserved, one-to-one model, no fractional reserve risk. And the regulator approaches some of the unique risks and opportunities in the digital asset ecosystem with a very tailored approach. So when you're talking about on-chain surveillance and monitoring, how we custody our digital assets, hot, cold wallets. And so, the process here, I think we've received a lot of questions on what did that look like? And it was a very deliberate process that, played out in cooperation with the Wyoming DOB, with the Kansas City Fed, and I think fits squarely within the framework that, received a lot of attention and public commentary from the crypto ecosystem as well as the traditional banking community.
Jonathan, Kraken was granted a limited purpose master account, which seems to be along the lines of what Fed Governor Waller proposed last year. Those rules aren't written yet, but the comment period has just ended. Would you kind of describe this as something of a test case for quote unquote skinny master accounts?
Well, taking a step back and looking at all the master account features, this is certainly, a step forward in what we received and what we're working with. Does not cover the full array of account features. But that was very deliberate. Our Kraken financial business operates a custody solution, qualified custody, that powers part of our broader institutional offering here at Payward. And so the features that we have allow us to move faster and connect directly to the US dollar settlement system, allows us to hold overnight balances. And what that does is it removes layers of intermediaries, from the system. And, that has been done with a lot of review. And if you sort of look at the history of how we've scaled our Kraken financial business, there's been many years of engagement with the regulator, examinations, oversight, now bringing the Kansas City Fed into the picture with increased oversight. I think, the combination of that really speaks to both prudential safety and soundness, which is a core pillar of what the bank regulators are here to do, but also embraces some of these innovative new frameworks. So huge credit to the Federal Reserve Board. I think they're continuing to look at ways to expand account features, how to scale this going forward in a deliberate way. But our result and announcement this week really goes back to the framework that was laid out in 2022, which followed, again, a very deliberate and transparent process.
Yeah. So Jonathan, on that point, I know I got a flurry of questions internally on, becoming a bank, for lack of a better set of questions. And I think it's really interesting to see this flurry of activity, and obviously the regulators willing to engage with institutions like Kraken. It seems like this probably fits or feeds into sort of the Kraken 360 sort of suite that you guys announced kind of in the previous weeks. Can you just, like, for our listeners and sort of maybe like the industry more broadly, what kind of things does this actually unlock for Kraken from like a suite of products? Like what does it mean to sort of become a bank like with this kind of a license?
Yeah, it really is about operational risk management and efficiency for us, right? So if you, again, take a step back and look at our broader Payward family, we have expanded into traditional market products and services, right? Equities, derivatives, payments. We're rapidly expanding around the world into regulated crypto frameworks. Eager to see clarity here in the U.S. with the market structure bill, but that trend is consistent across G20 countries and beyond. And we're continuing to push the envelope and accelerate in the DeFi ecosystem as well with products and services. So what this does is gives us more control, better risk management, operational resilience, just in terms of managing client fiat balances, and allows us to look more holistically at how we're integrating our qualified custody product and customers that use that and value that higher level of trust, security, with qualified custody, as well as depositing and moving fiat faster, more seamlessly. Like if we look back at what the reliance and dependency on correspondent banking partners has done, and even recent bank failures in the past couple of years, those traditional bank failures created risk for the crypto ecosystem. It wasn't the other way around. And so, I think this is a great testament to the cooperation, again, that we've seen with the Kansas City Fed and the Wyoming DOB. And, we look forward to continuing to engage to look to scale that, and also engaging in the policy process that, Governor Waller's led, but, also the board more broadly, as we continue to look at how to expand new account features and just, more seamlessly integrate the benefits of the digital asset ecosystem into the traditional payments and banking sector.
I guess on that note, Jonathan, something I've been wondering while you were talking too is like, is this kind of moving Kraken into more of a traditional entity across crypto, banks, fintechs, et cetera, and not just the crypto space? Like, is the ultimate goal to kind of create this like brand change as well, where it's more than just like a crypto exchange?
Yeah, absolutely. We've really evolved into, what we call a super infrastructure, multi-asset business. And that's not just here in the United States. We've really been accelerating our regulatory forward approach in Europe, Middle East, Asia, to really provide the broadest array of products and services to our customers. And I think we're seeing tokenized equities as a great example where the benefits and power of this technology are really expanding access, right, to customers not around the world, and that's really what we're here to do. We're really here to grow the crypto ecosystem. That's been a core part of our mission. But part of that is also bringing traditional market participants and new customers, whether they're consumer or institutional, into this ecosystem. So I think this, again, gives us another operational capability to scale faster, more seamlessly, and in a safer and sounder manner than the reliance on correspondent banking partners as we've had in the past.
Jonathan, perhaps not so surprisingly, the bank trades have come out criticizing the move as posing a risk to the banking system, something that you guys must have heard a lot, in the last couple of years, but also in the last couple of days for sure. So I want to give you a chance to kind of respond to these criticisms. Did the Kansas City Fed and the Wyoming Division of Banking examine Kraken before giving this approval? And are you guys subject to the same kind of examinations and scoring systems that these other banks with Fed master accounts are also subject to?
Yeah, absolutely. And I think it's really important to look through the headlines and look at the facts here. Again, the framework that we have with the Wyoming Division of Banking is not a fractional reserve model. Every customer asset that is deposited is backed one-to-one. And that creates a much different risk profile than a lot of the traditional banking sector, which operates that fractional reserve model, and creates different risks, which are obviously solved for through capital frameworks, et cetera. But this is a very different risk profile, number one. And then let's look at the process, right? This was a very deliberate process that evolved since 2020. And I want to give a huge credit to the broader Kraken Financial and Payward teams, because this was a large team effort across legal, compliance, policy, engineering, finance. And that entire team came together and worked really constructively with the Wyoming DOB in terms of examinations year to year, them getting to understand our business, how we approach risk management. I think, a key feature of this, and again, the Federal Reserve banks, the regional reserve banks, they take these decisions on a case by case basis. It's not a one size fits all. And I think one of the core pillars of since Kraken's inception is our security first approach. How we conduct security, how we protect customer assets is a core part of what we do. And that's made us one of the most trusted brands in the industry. And those same principles and features have been applied to this qualified custody product. And we worked through that with the DOB. We worked through that with the Kansas City Fed. A lot of engagement, constructive engagement. So the question of how we got here, there's a lot of engagement over the years. This was not something that happened overnight. And I think it's, again, a true testament to how we approach our regulators, here in the United States and around the world, whether it's traditional activity, new regulated crypto activity, or the DeFi ecosystem. The question of how we got here, there's a lot of engagement over the years. This was not something that happened overnight. And I think it's, again, a true testament to how we approach our regulators, here in the United States and around the world, whether it's traditional activity, new regulated crypto activity, or the DeFi ecosystem. It's really a partnership approach and requires that constructive engagement to get to the result we did today.
Yeah. So Jonathan, you just alluded to kind of the process and the amount of time and sort of qualifications that this takes to achieve. And it's a great achievement for you guys. You obviously have the infrastructure to support this kind of designation and sort of deal with the risk parameters it comes with. Some analysts have pointed to, like, is this a opening of the floodgates for everyone in the industry to go kind of enter into the system and create kind of more risk? I think we talked about that a little bit, but I wanted to ask you specifically about your thoughts on where the rest of the industry goes. Do you view this as like a lasting competitive advantage for Kraken and the suite of products you're developing, or do you think this is just kind of table stakes to deal with this like brave new world of kind of TradFi and digital assets sort of blending?
Well, it's certainly another Kraken first moment. You don't work at this company unless you have some pioneering spirit in you, and I think that's been true, here in the U.S. and around the world. We do expect others to follow. I mean, if you just look at the number and nature of the comments in the recent, Fed RFI, a lot of interest in the space, right? But I think it's important to remember that the reserve banks take these decisions on a case-by-case basis. There are no shortcuts, and it's just up to companies to engage, and up to the regulatory cooperation. Again, I think the cooperation we saw with the Wyoming DOB and the Kansas City Fed here was excellent, and it was something that I think we're going to continue to look to leverage as we engage on the policy front, as the Fed evaluates adding more account features. What does this mean for the future? So I think, this is sort of the beginning of the next phase of a longer story in terms of, how the digital asset ecosystem is going to interact with the traditional payment system in the United States.
Awesome. Jonathan, can we just pull up, Taylor, I wonder if we could pull up the Beware the Kraken article from October 2020.
It's a great one. You kind of signed up for
that. Yeah. Now that was written 6 years ago when you guys got your approval to be an SPDI, right, Jonathan?
I think that was 6 years ago. Yeah, lots happened since then. Lots changed since then.
Yeah. So maybe I don't know. BPI put out the statement the other day. Maybe they'll come back around and do a similar headline. Who knows? But
beware the Kraken in a new way.
Beware the Kraken.
Maybe it's welcome the Kraken this week.
There you go. That's much nicer.
But look, all joking aside, I do think the facts matter. There's a lot of focus. I think, concerns raised are valid, but when you look at the facts, you look at the risk management model, you look at the way the regulators have approached this. I think it's a very strong story. And I think we hope to see more of that. I'd be remiss not to call out and commend Senator Cynthia Lummis and her team. I think they have been not only advocates for building this innovative, strong, robust framework in Wyoming, but ensuring that state-federal cooperation that I think is just a pillar of the dual banking ecosystem in the United States. So very strong story there as well. All around team effort, and I think we're really proud of the announcement this week.
Can I have one quick follow-up on that, on the criticisms? And this is one of the things that always bugs me, whether it's about like lending or banking, or some of the other, I think, products that the industry introduces. There's been this concern about the lack of FDIC insurance. And you just mentioned that you guys are like fully or overly collateralized on the assets that are actually custodied with you guys. How would you explain to a consumer sort of the safety of the assets that they're holding with you, compared to this like reliance in the past on like the FDIC fund to basically just be like replenished whenever something goes wrong?
Yeah, I mean, I think it's simply that, it's you park your money somewhere, and the traditional banking fractional reserve model, they lend out on the other side. It's an important feature of the U.S. economy, right? We want to put capital to work, and that's how that fractional reserve banking system works. This is very different. Not only is our product very focused on qualified custody, largely institutional grade custody, but that one-to-one backing removes that fractional risk that exists. So high quality liquid assets backed one-to-one. Every dollar at Kraken Financial is there at Kraken Financial. It's not somewhere else in the ecosystem. And again, that doesn't play the same role in the economy as fractional reserves, but I think that's why the facts matter. Looking at sort of the risk profile of what we are doing, versus other banks and other models in the ecosystem.
Great.
All right. Well, Jonathan, thank you for coming on today, and congrats to the team. I'm sure you guys are celebrating. It's Friday. I hope you guys get to, have 5 o'clock somewhere early.
Well, I think we're back to market.
You're working. Yeah.
Market structure. Jonathan, we didn't even ask you about market structure.
How can we not talk about market?
All right, Jonathan, quick.
Right, last thing.
Quick,
Yeah.
quick rundown. Where do we stand on market structure right now?
Look, a lot of great progress this week, right? Not just on the rewards issue, but I think looking across the outstanding issues. So we're feeling really good. I think the industry.
Ask me about market structure.
How can we not talk about market?
All right, Jonathan, quick.
Right, last thing.
Quick,
Yeah.
quick rundown. Where do we stand on market structure right now?
Look, a lot of great progress this week, right? Not just on the rewards issue, but I think looking across the outstanding issues. So we're feeling really good. I think the industry has again worked constructively. Huge credit to the White House, House and Senate, both sides of the aisle. I think sort of working through some of these outstanding issues. There's a real commitment to get this done. But tying it back to this master account announcement, the faster we get regulatory clarity here in the U.S. for intermediaries, the more the traditional market and traditional market participants are going to be able to take advantage of the opportunity. So I think there's a real unlock here with clarity, for traditional market participants, and I think we're all eager to get there, whether you're part of the crypto ecosystem or the traditional market ecosystem.
I have to ask too. I mean, we've seen a lot of the oxygen get pulled out of the room, and that's actually an industry quote, not my words, from the yield debate, right? And to the point where some of these other issues in the bill, some feel that they've been sort of left out to dry, right? Do you feel that there is enough time to address those issues, and do you think that a Senate Banking Committee markup is likely to happen this month?
Yes to both questions. I think that what we've seen, part of regulation is things change, and there's no question that third-party rewards providers like Kraken and our peers, there's going to have to be some change. Additional disclosures, and other features that I think have been part of the negotiations. But again, I think week over week, as we've been able to engage more directly and more constructively with the banking community, we've seen positive results. So I think we're very close on that. It's not the only outstanding issue, but I think we're very close. So I'm confident we can get a banking committee vote, and the faster we get here, the better. I mean, we operate globally. A lot of the markets we operate 2-3 years ahead of the United States in putting these just foundational rules in place. So I think that commitment's there from the top, and we're looking forward to hopefully seeing a conclusion here soon.
Great. Thanks, Jonathan. Good
Thanks
to
for
see you
having
again.
me today. Great to see you.
Thanks.
Can't believe we almost forgot to ask him about market structure.
Almost.
No, if it wasn't for my joke about logging off for the day.
I know.
As if they don't have something else to work on. Yeah.
Right. Well, let's move on to Larry Florio, who is the Deputy General Counsel of Ethena Labs. I want to talk to him about all this regulatory guidance that's been coming out of the agencies in the last couple of days. We've seen initiatives from the SEC to the OCC to the Fed to the FDIC releasing guidance on capital treatment of tokenized securities and a potential framework for, a tokenized a token taxonomy from the SEC. So, Larry, welcome to the show. I believe it's your first time. So, welcome to Crypto in America.
It is. It is. Thank you for having me.
Good to see you.
Good to be on. Didn't you and Gerald work together at some point before this?
I wouldn't call it work together. We were in the same Google Doc once upon a time for Constitution DAO, and Larry did all the lifting. Yeah,
we heard about this the other day. So
I'm a Constitution DAO episode. That's very Crypto in America. It's very dated, but rest in peace.
No, that was a special day.
Yeah,
it was a special time. Yes,
that was different times. Yeah.
Well, let's get into some of this guidance stuff. We see your threads on crypto Twitter, Larry, breaking these regulatory moves down. I think sometimes it's easy to lose track of some of the developments as they come out, because I feel like they're just kind of rolling, from week to week, right? But I think some of the ones this week were pretty consequential. Why would you say, we can talk about the OCC one, is giving tokenized securities the same capital treatment as traditional securities such a big deal in your opinion?
Yeah, I think that at a high level, it's just that we now have an answer to the question. I mean, these are banking regulators, because it wasn't just guidance from the OCC. It was joint with the FDIC and with the Federal Reserve along with that. So this is all the major federal prudential regulators all saying this is how we view this right now. And these are banks, right? These are fundamentally risk-averse organizations. So they don't want to do something if they don't know how it's going to be treated. They don't want to affect the rest of their, multi-trillion-dollar balance sheets in some cases. And now they have an answer to the question of well, can we use tokenized securities as collateral? How do we hold them? What's the charge? Is it the same as the actual security, the off-chain version, or is it different? And these are, really important unknowns for a bank. And now they're not unknowns anymore. And I think that's actually a massive unlock. It's like these silly little things like an updated FAQ, but this is the operational nitty-gritty details that banks need, that really all regulated institutions need in order to operate in this space.
Yeah, the SEC also announced intentions to release commission level guidance on the classification of crypto assets. And we don't see a lot of commission guidance on that front typically. Is it a bigger deal than the staff level guidance?
It is, in that it's coming from the top, right? We often see this in speeches and in the FAQs and the other guidance. This may not necessarily represent the position of the commission. This is only my opinion. But when it's coming from a commission level as actual rulemaking or actual formal commission level guidance, that's different. That does carry more weight. And it's in many cases more difficult to overturn as administrations change. A no action letter can be withdrawn. That's one day it's, real guidance, the next day it's actually not anymore. It's that simple. But the higher up the hierarchy you go, the more difficult it is to issue. But then the trade-off is there that it's more difficult to withdraw or adjust. So this is really creating a protective moat for the industry to operate even as politics happen to change.
Yeah, Larry, I want to touch on the point I think I saw in one of your threads, and that I guess the legal industry has been talking about for a while now, is this does seem largely just confirmatory of the way you would expect things to work, right? So it's securities are still securities. Great, thank you.
I know
That's
it's these silly, like, this like refreshing air of like, oh, it's actually just
Yeah.
normal. Okay,
Yeah.
that's great. Thank you for not punching me in the face again.
Yeah, so I wanted to ask you about like the practical implications of that. So there are a lot of projects working on securitization or tokenization of a bunch of different classes, but what we haven't seen or what we're starting to see accelerate is the institutional adoption of the idea that these things are going to live on new rails, right? And so, I guess the first part is, leaning on this kind of guidance. Do you think we'll see institutions start to move faster? Or do you think this is largely just confirmatory of like the way things are going to go, and maybe that's just bullish anyways?
I think it's a little bit of both. I think that the larger the organization, the slower they're going to go, both from like a bureaucratic perspective, but also a risk management perspective. But it does enable either earlier stage or younger organizations to take on what they might view as more risk or be early adopters in a lot of this stuff. And that's really hard to do if you don't have this sort of guidance. It's these sorts of like little pieces that we put together that create the actual architecture for how we can operate in the space. You were just talking about how market structure is going, and that will be great when we get it. But in the meantime, here, at least we can see that the regulators aren't sitting still. They're moving because they know this is important. They're not just hearing it from us on shows like this or on Twitter. This is coming from their regulated constituency in many cases. They're being pressured to put this out. FAQs is sort of a handy acronym that we use for a lot of things and have for a long time. But it does mean that this is actually a question that is being frequently asked, and they felt a need to have to provide guidance publicly and not just as a one-off answer to a inbound question.
And it's interesting too. I think the guidance is separate to a rulemaking proposal that they also have in the works. This is just guidance that says, this is how we feel about certain types of crypto asset classifications and certain kinds of transactions. They wanted to roll this out relatively quickly just so the market has that kind of guidance to go on while rulemaking is still in the works. Because I think a lot of people forget this stuff takes a long time. And as we know, the Genius Act passed last year. They're still rolling out comment periods on how to implement the rules around that, right? So this could be like a 2, 3, 4 year process until we see, if and when clarity gets done, there's going to be a many year process to actually get these rules in place. So to your point, the SEC really sort of rolling out this guidance in the meantime. But something else I also found interesting is that they have to put everything now through this new, well, it's not new, but it's new under this administration, this OIRA portal, where they have to kind of submit everything that they're doing and socialize it with the different regulatory agencies and make sure like the White House and OMB know exactly what they're doing. That's new. And I spoke to an SEC spokesperson when he was kind of talking me through exactly what this was. And he's like, yeah, this is very new for us. Like we've never had to do this before. And so we're kind of getting used to the new sort of like regulations around here as well. So this is a little interesting thing too.
Yeah, I think it's kind of funny, right? Because now it creates this sort of teaser for us to all wildly speculate as to what's actually going to be released because we know that something's
Right.
actually in the works.
True.
But then we also, we lose the like breaking news to some extent because we don't get suddenly like a 500-page proposed rule and request for opinions that we sometimes did get in the past. In either case, though, honestly, I'm still just happy that we're getting this through any sort of rulemaking guidance, FAQ statements from any level of any regulator, rather than an enforcement action that just sort of has like a hand wavy. Oh, and there were things that happened, and we're getting like actual facts, actual circumstances, and something that makes it easy to operate and not just know what we can do, but know what we cannot do. It's just these simple rules of the road that I'm still adjusting to this new normal from the prior administration on a lot of this stuff, because when I see like, SEC released something, like, what is it today?
Yeah.
And I was like, this is today. All right, that's nice.
Yeah.
Yeah, Larry, I wanted to ask you about the timing of all this too. Do you find that this guidance or pending guidance is right on track, or it's a little delayed given how much the tokenization sector has grown over the past like 12 to 18 months? Should we have gotten something like this sooner?
I wish that we had gotten something sooner. I mean, there's a little bit of a cart and horse issue here where the regulators don't want to get too far ahead of industry. I mean, historically, that's not been the way that regulators tend to operate. Right. So they need to see what's happening in the space where the demand is to know how to address it. You need to have those conversations with parties that are looking to operate in the space in order to know like what's the framework that you should be thinking about this in. I think also many of the regulators probably expected that we were going to get market structure done earlier and faster than we have to this point, and putting out that sort of guidance ahead of that can actually make it more complicated long term, especially if that guidance does not align with how the actual legislation ends up looking. And now it creates a situation where those regulated parties have started to operate according to one set of rules and now need to pivot to do another. And that has a lot of high switching costs in some circumstances.
Yeah, Larry, I want to ask a question. I guess we mentioned when you came on your DGC at Ethena Labs, you guys are obviously doing a lot of interesting things that maybe aren't directly impacted by this kind of guidance. But I have a lot of conversations at Say about like approaching regulators in the absence of clarity, getting things sort of onto their desks and familiar with them. I'm sure you guys go through some similar processes. And something that Ellie said about that sort of new normal of collaboration that we're seeing kind of between the agencies, maybe not anything product specific, but just in this new normal, do you guys still see clear paths, I guess, based on the products and features you're launching to go talk to a specific regulator, or do you feel like there are kind of more people around the table earlier? Because like I know those processes can be really complex and long and drawn out. So how does this kind of notion that everybody is rowing in the same direction affect the way you guys look at what you're building?
I mean, I think in many ways it simplifies it a lot. I think if we're going to engage with a regulator, we have a general belief that that is a bit of a feel like a table stakes view that we're going to get, rather than one agency disagreeing with that interpretation relative to another one. So it makes it, I think, a lot easier to figure out how or if to engage at all. But at this point, in a lot of cases, we're waiting to see how this shakes out with market structure. Still.
Yeah. Well, hopefully we'll know before the end of the month. It's like I feel like it's still January, but we'll see how it goes.
It's March.
Yeah.
Happy March.
Yeah.
Thank you, Larry.
Thank you so much for coming on, Larry.
Appreciate it.
Thanks.
All right.
All right. I want to go back to the Jamie Dimon video. Can we pull that up? Just because we talked
bring
about
Jamie
Trump.
on.
Because we love Jamie.
Yeah. But we talked about the Trump tweet or the Trump truth, and it was an interesting. I mean, it came the day after Jamie Dimon weighed in on the whole yield debate, saying that he wants a level playing field with the crypto industry. And I think there was a lot of reaction to this on crypto Twitter. So we'll roll it.
The banks feel strongly that there should be, rewards are the same as interest. And that, a compromise would be that you could pay rewards on transactions, not balances. If you are going to be holding balances and paying interest, that's the bank. You should be regulated by a bank. So we've been firm. One thing over here, yes, but if you want to be a bank, become a bank. Then you can do whatever you want under bank law. So I remind people, and your viewers may not know, banks have restrictions and requirements. FDIC insurance, AML, BSA. We have Community Responsibility Act, which means we have to open 25% of our resident LMI neighbors. We have social requirements. We have liquidity requirements, capital requirements, transparency requirements, reporting requirements, board requirements, government's requirements. If they want to be a bank, so be it. So what we base is level playing field by product. It can't be you have these people doing one thing, without any regulation like that, and these people do another. And if you do that, the public will pay. It will get bad. So people should take a deep breath at what is you want, and we want competition. We're actually one of the biggest users of blockchain. And we created the JP Morgan deposit coin. We've moved money real-time payments. We're moving a lot of data now using blockchain. So we're in favor of competition, but it's got to be fair and balanced, level playing field.
Yeah. I have like an analogy that I've been bouncing around, and I don't know if it's perfect yet, but when you hear about like JP Morgan talking about a level playing field, it's like a guy who's like 8 feet tall arguing against like the 3-point line. Like you're like, no, like don't change the rule. We're all playing the same game. Like you don't need to change things. Like
that analogy works. Yeah.
Like no, this has been working great for us. Like just be 8 feet tall. If you want to play basketball, just be 8 feet tall. It's fine. Like it's
just throw.
it's just a little disingenuous. Like I think it's just it's just the game
Yeah.
is changing, and like you have the resources to figure it out. Just figure it out, but don't make these conflated arguments that like rewards are gonna, ruin the
Mhm.
system. I don't know. It's an interesting take that a
Yeah.
level playing field for JP Morgan applies the same to a 200-person company.
Yeah, I
Yeah.
think two things stood out to me. One was that yield and rewards are the same, because I think now we're in that phase where the yield on idle balances is not even part of the conversation anymore. And we're talking about rewards, right? But is it rewards on activity? That seems to be what banks are maybe at the baseline okay with, rewards on some kind of activity, as long as there's no rewards on idle. And then also, without any regulation. He talks about, why is one side allowed to do this without any kind of regulation at all? And it's almost like Genius didn't pass, right?
Right.
You have a framework that was passed last year for stablecoin issuers. They are subject to BSA. They are subject to KYC. And so I do feel like it's kind of just, I don't know if it's disingenuous or he's just kind of riffing, but it's like,
Mhm.
there is regulation on one side, and it's for a specific, it's not one size fits all regulation, right? It's tailored to fit, which is I think what Jonathan was making the point of earlier with the master account.
Feels a bit cherry picked to that point, Eleanor, though. Like it's we have Genius, right? And then market is kind of pending, but I mean, you kind of have to look at these things holistically, right? I don't know. Do we have a devil's advocate take for Jamie?
I don't know if I have a devil's advocate take. I think what I'll say is like they deal with this, traditional banking essentially stalled out after the financial crisis, right? And there was enormous consolidation. You can see all the charts. We've talked about them on the show before. So also the idea that like everybody should just be getting just becoming a bank is also like not very practical. But you've seen this in fintech. You've seen this in other innovative areas where, a neobank is just essentially like a collection of licenses that allows them to offer a suite of products that offer like similar or better functionality and better user experience to go into their like Bank of America branch, and you see the industry sort of adopt slowly. I think one of the things that's maybe not talked about enough yet, and maybe we'll have to do this on another show, but is the element that vaults play into this. So there are different ways. Like if you talk about a balance, you talk about a permission environment that's not like a regular liquidity pool, and you have institutions putting assets into those pools. Basically, what I'm saying is I think the technology is going to move a lot faster than the banks are kind of willing to deal with or capable of dealing with. And so you're not like this to me is just another example of like slow things down, give me enough time to figure out how this impacts my business, and then I'll tell you how we want it to be regulated and how you can compete with us. Like that's kind of more where this comes from my perspective.
Yeah. I
Yeah.
mean, things have been slowed down even to that extent. Like I know a lot of times these legacy financial institutions take their sweet time because they're so big. But it's been years in the making. Like stablecoins aren't new, these conversations aren't new, Genius isn't new, and market structure isn't new either. So
And to
yeah,
Jamie's point, Connexus has been around for years. They have been really deep in the blockchain space for years. So
yeah, there we go.
yeah.
We'll see. We'll
Jamie,
see.
if you want to
Just
come
ship it.
on, let
Just
us
ship
know.
it. Yeah.
Yeah, just ship it. Exactly.
All right, guys. Good show. And we will be back same time, same place next week.
Yeah.
Yes.
Just quick shout out. Chair Seelig,
What's this?
save the perps. Thank you, Greg, friend of the show, for the shirt. Very
Save
exciting
the
news.
perps, and it's pups.
Save the
Oh my
Yeah,
goodness.
we didn't get to
That's
talk about it
cute.
this week, but I'm very excited to cover it as this all unfolds. So
Well,
see how
Put it on
goes.
the docket.
we'll cover it next Friday. For sure. Maybe we'll see if Chair Seelig wants to come on, talk about it.
This is
Also,
an open
talking
invite.
of
if you're
pups,
listening.
you guys know my sister and her husband just got a brand new puppy. They're bringing
Yes.
him to New Jersey as we speak, so he's going to be around this weekend. I'm so excited.
Toast.
Toast.
Yeah, there we go. Doxing Toast on the show. You got to bring him on.
Yeah, gotta bring him on.
That's what you get for the beginning, Ellie.
Yeah, he doesn't know his name yet. It's fine.
Yeah.
He's not going to be called away by a stranger. Yeah.
All right.
All right, guys.
Well,
Have a good weekend.
Thanks,
yes,
guys.
have a
You
good
too.
one.
Bye, all.
Thanks.